got another one for Firm of the Future. How are accountants and bookkeepers really pricing their work? And so it was a survey done basically talking about the different ways in which accounting consultants or really just bookkeepers or any type of accounting work is changing as far as whether or not it's being billed by the hour more, whether or not it's being billed by the value, or whether or not it's being billed by, there was one more category that's I'm drawing a blank on.
Like
But
fixed pricing, which was
that's what it was.
it was like bill by the hour, like you said, value billing. They had like a different variant on value billing, which was like you bill by the hour and then you write it up or down depending on how you feel, kind of thing.
Yeah, it was like how much you thought you could extract or something like that.
And then the other one was fixed pricing, which is you come up with a fixed price ahead of time based on what you estimate you would have billed by the hour.
Yeah, totally. And so what it said is that basically everybody is moving away from the hourly basis of pricing, as it showed a couple of different years, and then it showed a couple of different categories as well. Both, I guess I'd already talked about it, but yeah, monthly accounting close versus cleanup projects versus consulting engagements. And it seemed to be pretty universally true that people were moving away from the hourly billing. But I kind of see it as I don't know. I think there's some pros to there's some pros to any of the approaches, of course. But I think it really just kind of depends on the gig, and that there's a lot of cases in which the hourly billing ends up working out better if you don't have a clear scope established, or if you're not sure how long something's going to take, and the client is willing to realize that that's an unknown. Then I think that putting an hourly billing behind it kind of fixes that problem the best that it could. So yeah, I guess I just want to get your guys' take on the different types of billing and when you think each is appropriate.
100%. And I would say, I mean, I could talk ad nauseum about this topic because being a former partner in a regular CPA firm and then now running our firm, TCA, I mean, I definitely had lots of different thoughts about these kinds of things over many, many, many years. I think there's I have a lot of aggravation with the industry. I wouldn't say aggravation. I would say just casual disagreement with some of our industry leaders in the way they push these topics because I agree with what you said, Charlie. I don't think it's a one size fits all thing. And it goes back to a topic that we were actually talking about on this episode earlier today. It is that, as AJ termed it, the identity crisis of accountants. It's the fact that accountants they have a hard time defining what it is they're actually selling. And so there's this desire among accountants to sell advisory services and value-added services, becoming the trusted advisor. And the idea of doing value-added billing, where you're not billing by the hour, fits with that idea. But here's where the identity crisis comes in. The truth about a lot of CPA, a lot of accountings, not just CPAs, but a lot of accountants works, is that they're actually not doing that kind of advisory work. And so I think you really have to know who you are and what you're doing, because I think you can do fixed fee bidding, but still I think applying a advisory pricing model to what is really what you would call delivery work. I'm using a phrase that comes from the management consultant Alan Weiss, and he makes this distinction between advisory and delivery work. A lot of accountants really do delivery work. And I think accountants have a hard time making a distinction between advisory and delivery work. They think they go into advisory anytime they do something that's not the standard tax return or audit service that a CPA firm provides. They think that becomes advisory, that becomes consultative and advisory in nature instead of delivery work. And I would disagree. I would say that there's different kinds of delivery work. Some is atypical delivery work, but it's still delivery work. And I'll give you an example of that. If you're doing client accounting services or straight bookkeeping, you're not doing advisory. I hate to tell you, you're doing delivery work. And I'm not putting a value judgment on that. You can make good money doing delivery work. Our firm does delivery work too. But where I think you get totally whipsawed on this is if you try to price delivery work with an advisory pricing model, it makes no sense. So I think you got to understand who you are. And what I say about an advisory pricing model is that value-based pricing, the idea that you say, how much is the client willing to pay for my involvement, for my contribution to their problem? Their problem is worth something. Solving their problem is worth something. And often when we're solving a problem in an advisory mode for a client, we're not the only one participating in solving it. The client themselves is also participating. And perhaps there's other service providers who are also participating in solving that problem, like lawyers or other kinds of consultants who are on the team, right? So you have to, when you're talking about pricing, doing value-based pricing for advisory work, the question that you're looking at is, we're dealing with a complex problem that most likely is not a standardized problem. It's not something I can apply my template or my super process that I've created to do with every client. I probably can't do that if it's a true advisory type problem. I'm talking about an advisory type problem, and I'm looking at that problem, and we know that if solving it, it's worth X dollars for that client. That's a very difficult thing to define. Sometimes it's easy to know how much it's worth because it's like, if I solve this problem, if this problem gets solved for the client, they're going to save $1 million. Well, that's an easy way. Like, it's like, if we can come up with a way to do some kind of tax planning, it's going to save them this amount of money. Or if we can come up with a way to reorganize their organizational structure and it reorients who does what on their team, it's going to save them this kind of money, right? There's different ways, but sometimes it's not that obvious. Sometimes it's like, we know solving this problem benefits the business, but figuring out the exact dollar amount that it really benefits the business is not easy. So that's not a trivial question. But if you're dealing with a problem that you can define in that way, then you can define, well, what's the value of solving that problem? Then the next step is, since we're not the only one participating in solving that problem, what's the value of our contribution to solving that problem? Right? Because the lawyers are helping solve the problem, other accountants may be helping solve the problem, internal management's helping solve the problem. So we're not the only one that leads to whatever the savings or the dollar value of that solving that problem is, but whatever our contribution is for that, then that's what we're trying to value. That is the core of the idea of value pricing. That idea does not really fly. That idea doesn't make as much sense when what you're doing is providing what I refer to as delivery service, which another term that sounds bad, but I don't think is necessarily bad, is you could call it a commodity service. It's a service that a lot of providers could provide. It's fairly standardized. It's not, it's based on a set of rules, right? Like filing a tax return. I mean, we could debate whether everyone files a good tax return or not, but there are many providers who can file a tax return according to the rules, or preparing a financial statement in accordance with GAAP, or performing an audit, or doing the bookkeeping for a client based on a set of processes or procedures. These are delivery type services that are in some regard a commodity service that a lot of other people can do. And so, again, that's not bad. I'm not saying you shouldn't do those things, but my opinion is those things are hard to value price. So I think in those cases, you need to look at, you're at best, you might fixed price them, but you probably, you may as well you might fixed price them, but you may as well just do them by the hour. And I think the other component of that Charlie brought up was what happens with delivery, which doesn't necessarily happen with advisory, is that the objective is that you're basically, another framework to think about it is, are you labor or are you kind of management, right? So a lot of times when you're doing delivery work, you're really just labor. Now you may be high priced labor. So there's nothing wrong. Again, let's not use labor versus management and say, well, labor is not what we want to be. Sometimes we want to be labor. If we can get a high rate for our labor, why not, right? And so I think that, and we do that. In our practice, we do exactly that. We go in as labor a lot of times, and we get a high rate for our labor because we're highly qualified for the labor we do. But it's not. But the direction that we're going, the client isn't asking our advice on how to get from point A to point B. The client already thinks they know how to do that. I say the client thinks because we know sometimes they think they know, but they don't really know. But we can't tell them because they won't listen anyway, right?
All my clients know. They don't think they know. not
Yeah,
like.
so the client already thinks they know how to get from point A to point B. So they're not hiring us to advise them on the path to get there. They're hiring us to get there, to follow us, to follow kind of their lead on doing this. And what we know from that is, well, because they don't actually know, the path is going to be kind of windy, and there's going to be a lot of going down the wrong path and coming back. And so we're just labor. We're not being asked to provide advice in that case. We're just labor. And so I feel like that we have to charge by the hour for that. That's an hourly deal, right? If you want us to entertain you and kind of follow you down the wrong path half the time because you just want to direct it, um, you know, then you've got to pay for us by the hour, because we can't accept the scope of, we're going to go down as many paths as you want to go while you're learning how this gets done, right? Because that's the truth about this, right? Is that it may be that if we're working under the direction of management that doesn't actually know how to get this done, but they insist on directing it themselves, it's because they're learning.
Yeah, I think you hit on a really good thing, and I just want to bring up a key term that I've learned to love over the years. You had mentioned how you have to know yourself to know what you're selling so that you can price it appropriately, and I think that's true completely. I think the other thing is that you have to know the client, because I think that some people are more prone to scope creep, which is the term that I was kind of coming back to, which is just this idea of like, well, you come here to fix this wall or whatever, and then pretty soon we're looking around and everything in the house needs to be rebuilt or redone or whatever, and the job is not clearly defined from the get-go, so it starts becoming more and more and more wide. And even if you knew what you wanted to sell going in there, you didn't know that that client was maybe going to go that route with it. And so yeah, I think it's good to think about your role in it, and also what type of client you might think that person is, and maybe maybe there's a client who hourly billing fits better for, because they don't have good comprehension of the scope at the onset of the project.
Well, and I think the point that everybody's making, and the point that I kind of take issue with in the article, is it kind of seems to me like they present it as a one size fits all. You need to figure it out and either do value pricing, hourly pricing, or the other one that slips our mind. But I think CPA firms do a poor job of identifying the services that they're selling most of the time. This is just my opinion, where, like Ty said, they don't realize, they're trying to sell themselves as advisory service because they think it's outside of that core scope of a tax return or audit, yet they're really delivering delivery services. And they think that they're billing what they think they're billing for in value is different from what they're actually giving the client. And I think that, on this podcast and in TCA, we've had this talk for 6 months, more so than I've ever had in the first 20 years of my working career. And I think it's really helped us define internally what services we're selling to which client and how that is priced, and then how that is delivered to the client. And I think we've benefited greatly off of that, where we don't end up in a situation where we don't know what we're doing with a client, or end up upside down because we presented and billed for one kind of service and we find ourselves in a different service. And so I think everybody could take stock of what they're selling and rigidly define what kind of services they're offering and how they price for that.
Yeah. I think I'm an accountant's accountant. So I think experienced accountants, CPAs or not, I think that they bring a lot of value to the table. And the truth is that they are capable of providing advisory services in a lot of cases. I think in a lot of cases, they do provide an advisory service in some ways, and they don't even recognize it. So I think the real tragedy, like, this is kind of a side topic to this question about pricing, but I think the real tragedy that I see for CPA firms on this point is that what accountants don't seem to know how to do is they don't know how to design, sell, and then stay on task with an advisory service. They don't know how to design an advisory service, sell it, and then stay within the advisory realm when they're doing an advisory service. And so what I mean by that, when I say that, is that the tragedy in that regard is that your accountants that do your typical delivery services, whether it's a bookkeeper who does the accounting for a company, or a tax return preparer who does the tax returns for the company. More often than not, they actually do provide extra advice to their clients. So, but they don't design it as a separate service and bill for it. So what happens is they're billing the client for doing the tax return, or they're billing the client for doing an audit, or they're billing a client for doing their bookkeeping. And then the extra advice just comes along for free on the side. It's not designed, valued, and then sold, right? And so they both are capable of doing the advice, and they are giving it, but they're not capturing any economic value for what they're doing on that front. And I think I'm obviously not the only one who sees this. I think our industry sees that. And so then that inspires this whole thing of, okay, accountants, okay, firms, quit doing that. Quit giving the advice away for free. You need to start focus on selling advisory services. But then what happens is we don't know how to do that. We give those services away for free, but we don't actually know how to design an advisory service to sell. So what we do is we come up with a menu of other delivery services that we call advisory, because that's what we know how to do as accountants. Like accountants like the comfort of, oh, I checked off a list that I did this. We like to deliver. It's in an accountant's nature to deliver. And so the idea that you get paid just to provide advice on something is very foreign to an accountant, I think. And so I think that makes it very difficult for us to structure a true advisory service. And so that's what I see across the board. I see firms and accountants who claim to be doing advisory consulting when all they're doing is just a different variety of delivery.
And this is a great segue. And for our viewers, this Friday, we'll be having a $399 webinar on how to boost your firm sales by 50% by selling advisory services. I'm joking, of course. We don't have a webinar.
We're not. I've seen that YouTube video too.
Yeah.
or that LinkedIn advertisement. Yeah.
All right, everybody. That's been our podcast. Thanks for watching. Please like, comment, and subscribe. And come back again next week for more articles on what's going on in the world of business. Thank you.